Most important thing now is that you remain calm. There's no reason to panic.
Professor, would you say it's time for our viewers to crack each other's heads open and feast on the goo inside?
Yes, I would, Ken.
Hey guys, Rob here from the Endgame Investor, and today I want to show you two different charts. The first one is this one. These are two indexes plotted against each other since 1990. This line over here is the CRB index, the commodity index, a broad base of commodities that's been around. This index has been around since the 1970s. And this line over here that looks like the mirror image of it is the dollar index, the strength of the US dollar relative to other fiat currencies. As you can see here, since 1990, from 1990 till looks like 2021, beginning of 2021, these two indexes, the dollar index and the CRB index, have basically been mirror images almost perfectly. And that makes intuitive sense because as the dollar strengthens, that means people are selling things in order to get dollars, which would include commodities. So the stronger the dollar index is, and since all commodities are priced in dollars, then the weaker commodities prices in dollar terms should be. And that is what has played out for at least the past 31 years on this chart, and longer than that if we can go farther back. Something changed in 2021. This mirror image, this inverse correlation, no longer seems to apply. The last inverse here was this tiny little blip beginning of 2021, but now commodities are just going up and up and up in dollar terms, despite the dollar reaching a new high over here, a new 5-year high. What this means is that people, meaning primarily financial institutions, I believe, are selling assets for dollars because they need dollars to pay their debts, as a lot of them have dollar-denominated debt. And this is what you see at the beginning of a liquidity crunch, which might be what is happening now. Except commodities are not being sold for dollars. Those who have commodities futures, or commercial actors, or whatever they are keeping their stockpiles. They are not selling them for dollars. That's why commodities are not going lower. However, the financial system is weakening as we speak, and they need dollars to service their dollar-denominated debts. Here is the second chart I want to show you. This is a table I compiled of the TLT ETF, which is the US Treasury ETF, 20+ year long-term Treasuries ETF, and the QQQ, which is the NASDAQ ETF. These are the days since 2002, the founding of the TLT ETF, when both securities went down by more than 2% in the same day. As you can see, it is extremely, extremely rare. It has only happened 1, 2, 3, 4, 5, 6, 7, 8 times since 2002. 6 of those 8 times are in the last 2 years. 2 in March 2020 during that panic, once in November 2020, and 3 times in the past month since April 5th. On May 5th, on Thursday, May 5th, it was the worst day for the NASDAQ and the TLT and the Treasury bond index here in history since the TLT ETF was founded. Arguably, you could say that March 18, 2020 was slightly worse, but let's not split hairs here. It was a historic day. And that means that what we're looking at is a sell-off in bubble stocks, in the bubble tech stocks symbolized by the QQQ, by the NASDAQ ETF. And people are not running to treasuries. Instead, they're selling off treasuries also. What are they buying? They are buying dollars, meaning they are just selling their securities and holding cash. Cash is in high demand, which means that those who need cash to settle their dollar-denominated debts are willing to pay a high price for it, and the dollar index could keep climbing from here. There may not be a triple top here, and if the dollar index continues higher, we are on the cusp of a liquidity crisis. And if we are on the cusp of a liquidity crisis and commodities are not falling, that means the Fed might have to step in a rising commodity price environment, which means to feed the hyperinflation that is already happening. And once the Fed reverses in order to save financial institutions for one last time, that is when I think the end game begins in earnest. We could be days, we could be weeks, we could be months away. We have to watch very carefully what happens, particularly to European banks at this point, if they start spiraling downwards. And bond spreads, meaning the interest rates on junk bonds, goes higher and higher, especially on corporate debt. That means that institutions need dollars or there will be a domino effect of defaults. The Fed steps in, commodity prices keep rising. If they print money like they did last time, they would have to print even more than they did last time. Then commodity prices will explode in a hyperinflationary spiral, and that is when I believe that gold and silver pull away from the rest of the commodity complex, and everyone suddenly understands what's going on. Meanwhile, Bitcoin continues to sell off with the NASDAQ. They are correlated very tightly. It is a speculative bubble, just as tech stocks or Tesla or whatever is a speculative bubble. In a monetary crisis, the monetary reserve of the world is gold and silver for the public. That is not going to change this time, I guarantee you. If you enjoyed this video, consider signing up for a 2-week free trial of the Endgame Investor. By the time your trial expires and you have to decide whether you want to pay or not, the Endgame might already be here. Maybe not, but maybe yes. So you may as well use those 2 weeks to your advantage. Have a good week, and long live King Dollar.